Hello and welcome to one and all. We are grateful that you guys could take out your time and join us for this session here. We had an overwhelming response in terms of registrations. People have just started pouring in. Let us just wait for a couple of more minutes when Anil and myself can take you through the session. I would request each one of you to probably start writing in the chat wherever you are joined from, because I understand it's different time zones. It's 2 more minutes to start. If there are friends and family who told you that they're going to join with you, please share the link with them. We would love to address them as well. All right. It's 6:35. I think it's unfair for people who join on time, not for us to start on time. So, good morning, good afternoon, and good evening to all our clients and maybe to be clients who have joined us from different parts of the globe. Right? Definitely something caught your interest, which got you today here. We are absolutely grateful for that. It could be the cross border investing, it could be how to manage your taxation, it could be how to manage your retirement, and so on. Myself, Shelza, a financial coach with Happiness Factory. I've always been driven towards finance and hence ended up doing CFA and MCOM as well. I find my clients find their enough. Help them. There could be people who are anxious about money. There could be somebody who is very casual. But to confidently tackle and overcome all of these financial challenges is something that I try and do with my clients. I am joined here with my very favorite colleague, Anil Kothari. He's the VP and the financial coach with MFA. He has a lot of credentials to his name. He has a CFA, CFP, our senior research analyst. He only deals with the end. Considering his skill set, he's also our advisor representative for HRC, Happy Rich Capital, which is one of the organizations that we have. Together, we are going to be taking you through the session. Let's set the base here. What are we here for? The NRI landscape, the challenges and the complexities that one faces, the risk that needs to be attended to, the global uncertainty, be it the US tariff or the China real estate. All of us know about the Evergrande story. Be the OPEC trying to control the supply to be able to control the prices. All of these are real risks that we need to navigate through. We are going to be sharing some real experiences today, how we handheld our clients and took them through this journey. And how? It's always the India growth story. Our strong corporate earnings, be it our manufacturing or digital ecosystem, which is always expanding, the policy, the government helping us, which will definitely help you build a long-term wealth. And of course, the session ends with a Q&A. Before we get into the discussion, can I please request Raksha to be taking the poll? Would request each one of you to take a few moments and fill this up. Is this done? Let's discuss about the challenges that the NRIs face, right? We have a legacy which goes back to 2 decades now, wherein we have specialized practices. Our favorite being the NRI because they are always confused. They don't have the clarity of where to invest, how to track them, and monitor it. Our platform is digital, which helps you access the assets from anywhere in the country. The NRIs always come to us telling us that we are unable to identify that product which will actually consider their risk appetite, their life centric goals, and hence help them lead a peaceful financial life. That's simply because of the lack of quality advisory service, unfortunately. Taxation confusion forever. There's always a fear that they might have to pay high taxes. We are all aware of the DTAA, which kind of holds, there are some countries, as we know, like Singapore, Malaysia, Dubai, which don't have to pay those taxation. The taxation norms can be very varied basis on different asset classes, accounts, the types of income that you generate in your particular country. The fear that there can be unexpectedly high tax liability due to misinterpretation and regulatory norms is always on the top of their minds. Repatriation, again, what is the best way to do it, which is the cheapest way to do it, how can you move money smoothly is definitely what is there on the which plays on the mind regularly. NRIs surely will have assets that is spread across the globe, right? Which definitely makes succession planning a bit of a challenge. Transmission of wealth to the rightful beneficiary, which can, which will be legally and logistically complicated, right? The next point, of course, is the trust gap. Each one of us have heard stories where they moved up to India for their yearly visit, and the bankers, of course, which is the first financial institution that everyone is associated with, they end up selling us products which are very costly, but we don't know what are the benefits for the same. Currency risk is real. We hear from our NRI clients that, we totally believe in the India growth story, but what about the currency fluctuation? We've done our case studies and we can tell you for a fact that it still makes sense to invest in India. There are, of course, the risk that we cannot ignore, the limited visibility. Their insights are restricted due to geographic and time zone differences. This can lead to delayed responses to the market change and hence the decision making. They might miss out sometimes on the opportunities if they don't have somebody to handhold them, right? Compliance anxiety, we just spoke about it. Cross border investments are subject to complex regulatory norms in India and their country of residence. They are constantly worried not to be paying hefty fines and get into legal troubles. The advisory, unfortunately, is not enough and transparent, wherein they do tell you that you are their preferred clients. They will send you, give you some Imperia cards, and hence give you different products which might not be relevant in your life situation. Wealth erosion, this might not be specifically for somebody who's outside India, but that's our recurring concern, right? With the kind of economic volatility, inflation, local crisis, it might lead to erosion of wealth, and you might not be able to plan for the next generation, right? Each one of these are factors which we need to overcome. Today, Anil, with his expertise, is going to take you through the story of the markets. Anil, can you please help?
Thank you so much, Shelza, for taking us through that. And you rightly mentioned about the challenges faced by NRI community. And now there are all of these challenges which are there. But apart from these challenges, we also know that we keep hearing so many things in the market, right? We keep hearing these headlines, we keep looking at these news articles, and kind of somewhere it changes our decisions. It kind of impacts our decisions, and somewhere, as a human, we kind of tend to make mistakes because of what is happening across the globe. And we have been hearing about tariffs, we have been hearing about SEO summit, we have been hearing about Nepal, Japan, France. All of these things are recent. And let me also tell you that these are not the only things that we have been hearing. There are many more things. So how do we kind of look at these things and factor all of these things in your investments? That is going to be the key. So let's talk about the few key ones that we are kind of experiencing right now. This is the buzzword right now, tariff, right? And we have seen that in the last 5 to 6 months, us government has been imposing, I mean, hefty tariffs on almost all the major economies, and we have seen that. And there have been multiple rounds of discussions, multiple rounds of kind of trying to settle or trying to reach a deal which would be beneficial for each country. Now, where does India stand in terms of tariffs imposed by US? Obviously, you can see in the graph that we are at 50%, which means we are at one of the highest tariff rated countries out there, right? And this somewhere kind of creates that panic in the minds of the NRI community, or maybe the foreign nationals or FIIs, foreign investors who want to put money into India, thinking that, okay, if this stays as it is for the longest period of for a long period of time, this is going to create an impact on the GDP of Indian market or Indian economy. That's a valid concern. But now let's look at how much will this have an impact on the I mean on various countries. If we go by the official data of IMF, we can clearly see that, okay, while this will have an impact on the GDP growth rates of many countries, but if you look at US, I mean, the biggest revision in the GDP, the negative revision in the GDP growth is for US, which is about 0.9%. What this tells us is that, okay, if this is going to be the case, US will not have these tariffs forever. They will have to reach a deal at some point in time, and we don't know whether it's going to happen in the next quarter, it's going to happen in the next 6 months or 1 year. But at some point of time, they have to negotiate and come to a deal which will be beneficial for each country, because every country has to work together, right? But again, this risk is real for India right now, and this is a risk which has created this volatility in the market, which is also real. We have seen that markets have kind of not delivered great returns in the last 1 year as we speak. But is this really 50%? If we look at all the numbers, all the tariffs which are imposed in multiple sectors by US on the Indian imports, you would see that there are many sectors which are exempted from this. And that also means that if you look at the effective tariff rates, it comes to about 33.6% and not 50%. So I know that, okay, this is there, but it's not the number. The 50% is not the number. Again, if we go by the worst case scenario and feel that, okay, this is going to be the case forever, still how much will this impact Indian economy? So I mean, if we go by the various analyst numbers, we know that, okay, this could have an impact of about anywhere between 30 basis points to 50 basis points on India's GDP, because the share of US export in the overall GDP for India is very, very low. It's somewhere around 2%. So we have to keep that in mind, because we should not be panicking because of all of these news articles. So apart from tariff, there are again many things. And so what is happening in the market and the impact? Let's look at that. GST 2.0. Now, what is it? To counter the tariff impact and to also kind of simplify the taxes in Indian economy, the GST Council has recently kind of revamped and changed the rates applicable on various sectors. Now, this is very, very important. Why? Because earlier we used to have four-tier, GST rate structure. Now, from four, they've cut it down to two, and the rates have also been reduced. Now, why is this important? This is important because many of these sectors which are now coming into the lower, GST tax rate structures like auto or FMCG or the insurance sector, all of these are very, very important, and the cost of these will go down. The impact of that will be that we will at some point of time see an increased demand for these things. This will increase the consumption in the economy. So that kind of counters the tariff impacts. And also, again, we know that, okay, this might add about 30 to 50 basis points in our GDP. So that kind of counters those impacts. Again, if you look at the other data points, very, very promising numbers. Oil prices have remained comfortably low, somewhere in the range of 65 to 70 US dollars per barrel, which is very important for India because India is a major importer of the oil. Any increase in the oil prices will have a direct impact on the inflation, on our current account, on our fiscal deficits, and again on the interest rates and foreign investors coming into the Indian markets. Inflation is coming down. We have seen that constantly. The recent numbers were very, very low, somewhere around 2%, and that also gives a confidence to the market. Okay, if the rate keeps coming down, somewhere the RBI will also continue to cut interest rates in the economy. Dollar index is below 100. What does that mean? Uh, that means that dollar against the six major currencies, it is down. It is kind of undervalued right now, and which means the foreign investors will now start pulling out money from the US market and start putting back into the emerging markets. And India could be the beneficiary of that as well. All India rainfall remains above normal, which is again good indicator for the rural economy. We have also seen that the capital expenditure cycle, this has picked up, and this used to be a major concern for India before COVID, because to kind of boost the economy, the governments were kind of spending money to a large extent, but the mood of the private, the mood of the corporate sector was kind of muted. So now we are seeing tractions of capital expenditure in coming in from the corporate sector as well, which is a positive sign. This one is very, very important. SIP, systematic investment plans in India, has grown to a record high of close to 28,000 crore. This means that every month this money is coming into the mutual fund to be deployed in the markets. Now, so even if nobody is putting in a single lump sum rupee, this money needs to be deployed every month. Now imagine the kind of support the markets have got because of this inflow, right? RBI has started cutting repo rates in India this year. That is a very, very positive news for individuals, for corporates, because the rates are linked to the repo rates, and somewhere the cost of borrowing it will go down. GST gross collections are very, very stable at around 1.80 lakh crore in the last 1 year. That also kind of gives confidence to the government to kind of go ahead and execute the reforms that they are kind of planning. This one is, although if foreign investors are selling in the Indian market, and we have seen that in the last 4 to 5 years, foreign investors have sold much more money than we had seen in the 2007 and 8 era. Still, at that point of time, the markets were down by about 55%. Today, we are still trading at all-time high. The major reason for that is because while they are selling, domestic investors have been continuously putting in the money. That is very, very important thing to keep in mind, because we have seen this change post-COVID in a large way. India PMIs continue to be highest among major economies. Now, I'll just take a moment to explain what PMI is. This is Purchasing Managers Index. While all the other data points that we have seen are lagging indicators, it tells you what has happened in the last month or last quarter or last 6 months. This is one indicator which tells you what is going to happen in the future. It's a leading indicator. Now, this is among the highest in terms of compared with the major economies in the world. Banking liquidity is in surplus. Forex reserves are comfortable at $700 billion for RBI. And even if we assume that, okay, right now the rupee is somewhere around 88 and a half, and even if it were to depreciate further from here, We don't need to panic because of that, because RBI is in a comfortable position to intervene in the markets and give that support to the INR. Now, what has happened because of all of these things, all of these good macro data points, is that the world has started noticing us, right? And how do we why do we say that? Because S&P, which is the one of the biggest rating agencies in the world, they have upgraded India rating to triple B after many years, and that also means that now the foreign money will again start coming back. So we already have domestic money which is getting into the market, that has supported the market, that has helped us survive this tough period. Now, imagine if the foreign money again starts coming back into the Indian markets, we might see another leg of rally coming in from the markets. That's very important. Although all of these things are very good, I mean, looking at these numbers, there is no doubt about India's growth story. But still, we do go through the correction periods, right? We have seen that last September onwards, the markets had kind of gone down by about 15% or so, right? And we kind of recovered also nicely from there. What this slide tells you is that every time that happened in the past, talk about the global financial crisis, talk about the dot-com bubble, talk about the COVID fall, every time the red or the left hand side bar, if you see, that tells you the fall in the market and in that period, and how has the recovery been after that. If you look at the graph, it tells you that if the fall in the market is very sudden and very sharp, the recovery is also very sudden and very sharp. So whenever these kind of situations arrive, whenever we are in the uncertain period, or we hear about all of these noises around us, the news headlines, we should not be panicking, because we should be finding opportunities in all of this madness. That is the key, because somebody who can stay invested and put in more in the when the stocks are available at a discounted price, this is the best thing, I mean, as an investor you could do. Now, why we have established the fact that there is India's growth story, we believe in it, it will go through ups and downs, there is no doubt about it, but we have to stay invested. But how do we take exposure to Indian markets? Correct. That is the biggest question. Now we are aware of the traditional modes of taking exposure to Indian market. Like, you have a demat account, you can buy whichever stock you want to buy. If you want to invest in through mutual funds, you can do that also from your NRO account, your NRI account. Now today we want to talk about a new opportunity in India through which you can also take exposure to Indian markets, and we're talking about the Gift City. Right, Gift City is Gujarat International Finance Tech City. I'm not going to just read this slide. What Gift City basically means is that this is an international market. Think of a Gift City as an international market within India, right? And this is India's first such effort in terms of making a international market, or kind of to ease the operational requirements of the foreigners and foreign NRIs. That is very important. Now, what happens in the Gift City is that, if we talk about specifically asset management within the Gift City, the main objective over here is that if somebody who's living in India wanting to invest outside of India can do that through the Gift City route. At the same time, somebody who's living outside of India, whichever country it is, you can invest through the Gift City also. But you would say that we anyway do through mutual funds and stocks and other products. But the beauty of this is that you don't need to give any Indian documents. You don't need to have any bank accounts over here. You don't need to pay any taxes over here. This is all kind of taken away. So what essentially you do is that you give your proof of address, you give your ID proof, and with a very easy paperwork, you kind of set up your account. Once the account is set up, you directly transfer money from your foreign account into the Gift City account, and the money is invested. All the transactions in Gift City happen in US dollar, right? And when you sell your investment, the money comes back into your account in your local bank account, right? So it kind of eases that process. Now let's look at some of the benefits of Gift City. Non-residents get access to investment opportunities in India. No requirement to open a bank account in IFSC Gift City. Non-residents need not apply for PAN in case they don't have it. While redeeming, there is no TDS which is deducted. No requirement to open demat account in this Gift City. Investments can be made in global currency such as USD. Foreign nationals and FIs need not obtain FPI license with SEBI. Now, this is not just for the NRI community. So far the foreign nationals could not invest in Indian market, individually, but now they also can do that through this route. That's a huge change. Investment income is completely tax free in the gift city, but it is subject to taxes in their respective country. So somebody who's living in Dubai or Singapore or any country where there is no capital gains taxes applicable, you actually don't end up paying any taxes. You don't pay tax in India, you don't pay tax in your home country. In case there is no other Indian income, no need to file your ITR also in India. So while now we have looked at the India's growth story, it looks good. We have also looked at the option to kind of take exposure to Indian markets. Now actually look at how, at MFA and Happiness Factory, we help our clients achieve that goal. Yeah, Shelza, over to you.
Thanks, Anil. So beautifully explained. India seems to be the only place to look forward to, right? And with Gift City option, there's no looking back. So the clients who have joined us today, of course, know about us, but the ones who don't know, our legacy goes back to 2005. That's when Amar, our founder, took up this opportunity to start this organization, which is niche goal-based investing firm. There has been no looking back from there. We have grown from handful of us to almost 150 plus professional team today. Our CEO, Ma'am Chitra Iyer, who heads this organization, has beautifully given shape to this wonderful organization. We have always been ahead of the times, and that is when around 2017-18 we gave the birth to Happiness Factory, which is an online platform. So MFA was an offline, and Happiness Factory is the fintech version of the same. We again focused on the need-based planning, which is our forte. And of course, 2020 gave it a boost wherein we could completely handhold each of our clients, friends, and family who are outside the country. We had the need to come out with Happy Rich Capital, which is our setup in New Jersey. That's simply because of the norms that US Canada has. Having 20 years of experience handling people's hard earned money, which has given us a lot of experience. It's we had comfortably sitting at $1 billion asset under us. This is no big responsibility. Also, we could spread our wings to 40 plus countries. Yes, our team members, our head office, of course, is in Bombay, Vile Parle. But like I am from Kolkata, I have my colleague here from Bangalore. We have our partners from almost all cities in this country, helping each one achieve their financial goals. Similarly, we were able to help our clients outside, and 40 countries is big. We never moved out. So a lot of investment firms have a goal-based planning as the term for today. We have been doing it for 2 decades now. Why? Because we believe that the life journey of every single individual is unique. Whereas a corporate like us starts off their working life way early, they are always worried about what to do with the ESOPs. Are they over diversified? Are they under diversified? It's very contrary to a doctor's lifestyle who is almost doing the specialization and super specialization till their early 30s. Their financial journey, of course, starts much later than that. Then, of course, we have business owners and the CAs who believe that they would never ever retire. They would continue to work till their last breath. But yeah, who doesn't want the financial freedom? Like I mentioned, Chitra, she is a mom to a very beautiful child, Shravan, who has special needs. She made us sensitive to this vertical of ours. She kind of explained and took us through this journey, telling us how a family who has special needs children are already emotionally drained. They need to be helped with the financial planning for 2 generations, right? And of course, the NRIs. As we became digital, we were able to handle each one of them. What do we do and how do we do it, right? It's a bottom up approach more than where you should be investing. Our question is, of course, why you want to do it. What is the significance money has? What have you done so far? That helps us create constructive goals into our client's life. We will navigate finances through the unique challenges and a complete handhold through different assets and geographies. Of course, every individual will have life goals, but each one of us will definitely get into the golden phase of retirement, which we don't think is the end line but a new chapter. And how our solutions have always ensured there's a secure income no matter where life takes you. Stay disciplined during market swings. We completely believe that more than investment management, we are into investor management. The ups and downs are real. And as Sherpa, we will handhold you and take you through that. Managing different dual incomes, currency fluctuation, taxes is something we've been talking about. We do regular reviews, connecting with our clients as and when they are anxious about different situations and otherwise. This is a smooth progression that we take them through. We also believe in planning for contingency, for the good and the bad days as well. Today, I'm going to ensure that I'm just going to take you through this one of the clients that we handheld him. He is Mr. Sundareshan, his wife being Mrs. Lakshmi. They are based out of Dubai, having two beautiful children. Of course, over the years, when they moved out of the country and otherwise, they had built a lot of assets. They were always worried about how there's going to be optimum savings, investing, and remittance when they moved out of the country. They did build real estate in Bangalore and Chennai. They had $200 assets, which were spread across some ETFs, bonds, and so on. Of course, like I've been mentioning, whenever they used to come to the country, they were sold some plans which they didn't know what is the benefit of the same, which kind of accumulated to almost 2.5 CR of ULIPs for them. The property, of course, was generating some 60K rental for them, but they were unsure. This is just before COVID is when we kind of got engaged with them. They were not very sure whether they want to settle down in India or anywhere across the globe. The taxation, of course, is the concern. Their assets were generating, which did have some lock in, low return insurance products as well. These were going to get free by 2030. So even though Mr. Sundaram took the policy considering that it is going to be beneficial for his golden phase, but if he had to retire earlier, he had no access to them at all. Also, when we were discussing with him, we do a full blown goal based planning wherein we need to understand what was his present need. So at that point of time, he needed some 3 to 4 lakhs for his living lifestyle needs, which of course, there is something which is currency inflation, but there's something known as a lifestyle inflation as well. So we always want to lead better life. All of this confusion, along with should they be holding the Dubai flat or not. What did we do for him? We ensured that he had peace of mind. How? By kind of breaking the financial maze into some personalized, simple, actionable advices. We took him through every single aspiration that he had built over so many years of working, making them into reality, which did include ensuring a top tier education for his children, financial freedom for himself, and something we truly believe in, a health corpus. Of course, a health insurance comes handy, but we all know post COVID, there can be any kind of spend which would just put our entire financial plan off track. We aligned all his assets. In some time, Anil is going to take us through how we helped him with that. We did recommend that since you don't have anything, so he just retired last year, right? So when he came into the country, there was not much of liquid assets available. We understood his future goals in 2020 and helped him start with a SIP of 4 lakhs per month. This is something we ensured was mostly into balanced avenues because we knew that he's going to require it anytime soon. Structuring his entire plan for his cash requirement, which was almost 3 lakhs a month today, between 2026 to 2030. This is no small plan. It took many sessions, putting all of his assets together, deciding how we can structure, restructure, rework in each bit of it. But today we are his family. He's got a clarity which he couldn't with anybody else. He's on track with his retirement. We are the only trusted person. Any kind of financial decision, we are the one he picks up the phone for. We have obviously advised him to make his will, which is very important. We have been able to sell one property here, the other, of course, he keeps because his child is living in there while he is doing his education. The Dubai property is still into consideration. And yes, we were able to build up the wedding corpus as well. This is something we would like to do for each one of you. How we helped him globally is what Anil is going to take us.
Yes, thank you so much, Shelza. So now we're going to talk about investing in US, right? We spoke about the Indian equity markets. We spoke about how it makes sense to kind of take exposure in a diversified manner, even within the Indian market. But at some point of time, if you really think about it, if you are investing all of your money in one country, and if you still are diversified across different categories of investments, different market size of investments, still if there is some macro event which happens at the country level or at the global level, there's going to be an impact on all of these investments in your portfolio, right? And that is where the true diversification is so important. Having a different geography, adding a different geography in your portfolio achieves that goal of that effective diversification. Because if something is happening at India level, maybe the US portfolio will not be impacted that much. So now, and of course, you can't ignore US as well, right? Because US equity markets dominates the global stock market today. Now, about 60% of the total market cap is in the US. Even US fixed income holds approximately 39% of the global bond market, and it's a huge market. uh, One of the benefits of investing in the US market is also direct exposure to the one of the most innovative businesses in the world, because the innovation actually comes from the US market, right? And not just that, you also get exposure, de facto exposure to the global markets through those companies, because those US companies are not just earning revenues from the US market, they are earning globally from multiple countries, and that is very important. All economy, you get to you get to take the exposure to all the economic sectors and cycles in that market. One of the benefits of investing in the US market is also the currency appreciation that you get. So if there's a difference in the inflation rates of US and your home country, the country which has lower inflation will see the appreciation in their currency, right? And we have seen that in the past as well. So India's inflation is somewhere around about 5%, and if you're talking about the inflation in the US somewhere around 2%, we would always see that if the difference is 3%, the Indian currency will depreciate by 3%. If something structurally changes in those rates, right? And that added to your overall returns as well. Digital assets, of course, we have been hearing a lot about the digital assets, also example crypto or investments, and those are also easily accessible through the ETFs available in the US market, and that is also somebody, I mean those who are comfortable with should have in the portfolio. What are the common uses of funds in the US in the future? Kids graduate and postgraduate fees. If you feel like, okay, your kids are going to study in the US, you can utilize those funds at any point of time in the future to pay for the fees. Could be used for travel abroad, because you know that, okay, you are actually investing in the US market by sending money to US. You can use that money whenever you are traveling there. And of course, if you want to settle abroad at any point of time in the future, you can still use that money. Now, this is of course very important to have in the portfolio. But more importantly, how do you do that? Because of course every country gives you the option, the local funds, and you can invest in those local funds, and those funds will take exposure to US market. The benefit of investing through Happy Rich Capital is that you actually send your money into the US custodian account, because we help you open one custodian account in the US, and the money is actually there. Money actually goes into that account, and you invest into various investments from that account. So whenever you sell your investment, also the money lies there, which you can use for all of these purposes at any point of time in the future. So that is how we kind of help our clients take exposure to the Indian markets and the US markets. And of course, we can discuss in detail how do we kind of go about it. It's not just looking at the portfolio, it's the entire process, like the purpose led investing, which is there, as Shelza spoke about, and that is the key. Especially if people who are living in the Indians who are living in the US. Would like to just mention one more point that because you are exposed to two different geographies, India and the US, there are always going to be these cross-border complications which will be there, right? You would have assets back in India, you would have your parents living here, you will get inheritance at some point of time, or even if you were to deal with gifting scenarios, how do you kind of do that in the most tax efficient manner? Plus you have your local retirement accounts like your 401ks, your IRA accounts. How do you kind of also factor that in your entire planning? Then you have to think about the kids future planning in terms of the education, in terms of your own retirement, estate planning. Everything has to be a written strategy, and that should drive your portfolio management, that should drive your investments, whichever country you are living in, be it India, be it US, or anywhere. That is the way to kind of go about it. So that's about it. We're going to take a poll over here. Raksha, if you can generate that.
You can put up your questions in the chat box. Or in the Q&A as well. We have our contact details here on the screen. You could reach out to either one of us. There's no questions, and that is it from our end. We shall look forward to connecting with each one of you.
Thank you so much for joining in. Thank you.
Thanks a lot for being with us.